Morning, everyone, and welcome to our webinar on property managers. Today, I have a guest speaker, Mary Jane Law, who is the Assistant Vice President at USLI. This is her specialty, so she's going to be presenting along with myself, Anae Augustini, CEO of CID Insurance Programs. We have Christina Cole and Sienna Vasquez, our professional liability underwriters. And Jacob Cole is our marketing specialist who runs everything behind the scenes to make sure it goes smoothly. So let's talk logistics. Everyone will be able to hear, but of course you'll be muted. Most of you have many of you have attended our webinars before, but we really want your questions. So we'll pose those. Please pose those in the chat room, and you can do it anytime throughout the webinar to make sure that you get your questions answered. We'll stop and take a moment to answer as they come in. And then, of course, we want your feedback as well. So we'd like you to take the short survey and let us know how we're doing and anything that we can change up to make things help you learn more. So let's get started with our objectives. So we want to understand this business opportunity for property management. It's a great one, but it is important to understand the exposures for this class of business. And so we're going to spend a little time on that. And then we're going to connect the dots with how the coverage really plays out, the coverage that's needed, plays out in claims examples that can help you explain better to your insureds the type of insurance they need. And then let's talk a little bit about how to best market this business. So without further ado, I'm going to turn this over to Mary Jane so that she can get started with the webinar.
Thank you, Anae, for having me. So opportunity, as you can see, in 2017, there were almost 320,000 property managers, community associations managers, according to the U.S. Department of Labor Outlook Handbook. Not every one of them carry E&O. More and more states are starting to mandate that if you're a property manager, you should really have a broker on board. The minute a broker is going to be on board to represent you, he's going to want you to have E&O. The more states that start mandating this, I can only see the opportunities for us to continue to grow. There's property managers for every type of property, apartments, condo and homeowner associations are our biggest. Vacation, that's my favorite. Then you have mobile home parks, industrial, self-storage. And property managers are actually a great point of sale opportunity to insure all of the properties they manage, because you want to have GL on those properties that they're managing. If they're a community association manager, you want to, and you have that GL book, you could probably cross-sell E&O to a property manager that's managing condo associations. Next slide. So property managers should really always utilize a management contract to identify and validate the terms of the services they agree to provide. In the event of a claim and absence of a contract, there could be ambiguity. However, if there's a contract that validates what was agreed to, 9 out of 10 times the insurance is going to respond when there's a contract in place. A management agreement usually always contains an indemnification clause that contains hold harmless language designed to protect the property management company. Some of your smaller property management companies may not have this, but if it's a bigger, well-organized management company, they usually always will have an indemnification clause, and it is always strongly recommended. And the property manager will typically include additional insured requirements for the owner's liability insurance, so that in the event they're pulled into a claim as a result of the association or the property owner, the liability will also defend the property manager. And then let's see the types of properties managed to clearly see the property manager's liability exposure. Of course, vacation management is a much minor exposure than someone who does habitability, multifamily properties versus someone who does condo association management. So we can discuss those as we go on. Next slide. So property managers are exposed to litigation by losses caused by their sole negligence or named along with the property owner in a lawsuit. Let me tell you, in today's environment, no matter whether or not the property manager is at fault, the lawyers are going to pull everyone into it. 9 out of 10 times, the property manager is the one that has the 1 mil E&O limits, so they always go after the property manager. But even in absence of them not having insurance, if a lawsuit is alleged against them and they don't have this coverage, they're going to have to defend themselves. And that can sometimes cause them to go into bankruptcy because defense costs are what usually drive the damages in a claim and drives up the size of a claim. It's mostly due to defense. So how does a property manager protect themselves? Aside from having the indemnification clause, they really need to carry errors and omissions coverage. Their exposure is mismanagement. It's diminished value. It's breach of contract, breach of fiduciary duty. For those that are making the decision who's going to rent an apartment and they run the credit checks, their exposure is also a wrongful eviction or a discrimination exposure if they choose not to rent to one person, whether or not it was due to a true discrimination. If it's alleged that that property manager discriminated against them and they don't have the coverage, they're going to have to defend themselves again. Are there different exposures for different types of properties? Yes, there absolutely are. Your bigger condo association managers that are managing a lot of different condos, enforcing covenant laws, collecting fees and things like that, they have a bigger fiduciary duty to the condo association versus someone who is doing vacation management, who is merely taking our credit cards and reserving a house for a week on a beach. Then you have the habitational ones that are making the decision who is going to rent and not rent. Again, they have the wrongful eviction exposure as well as the discrimination exposure. What types of claims do we typically see? As the product leader for this for property managers, the claims are all over the place. Some of the most common are mismanagement. They don't manage a building. There's a diminished value in rent. The owner of the building sues the property manager for diminished value. It's the wrongful eviction exposure. It's the discrimination exposure. In condo association management, like I said, there's the big fiduciary, breach of contract and the breach of fiduciary. Some of my bigger, uglier claims have been on condo association managers. Another exposure that we're seeing specifically in California and more on the West Coast is constructive eviction as a result of habitability. This typically comes into play if the property manager owns the multifamily property that they're managing because they have no one to oversee them, especially in LA County. If they let some of them big apartment buildings get to where there's mold and rats and bugs, and it's a big habitability issue where the tenants actually cannot even live there anymore because of the habitability. So they have to leave themselves. California sees that as constructive eviction, and that is something that would trigger coverage under the E&O form if they had the proper insurance. Next slide. So here's the coverages that they should really consider. the errors and omissions, that goes without saying. The discrimination exposure. Even if you're just a condo association manager and you're not making a decision who's going to rent, we're seeing more and more discrimination claims against condo association managers, especially if someone who owns a condo is now disabled. They claim that the condo association manager won't let them have a handicap parking spot closer to their condo. So those claims are on the rise. For the bigger property managers, you have an employment practices liability exposure. You have a director's and officer's liability exposure. Of course, cyber liability. Everyone in this world today has a cyber liability exposure. You have the general liability, the property, the fidelity, and of course your workers' compensation. All those coverages round out the most important coverages most property management companies need. Next slide. So professional, that's what's going to be covered under their errors and omissions. You know, they have a special skill. They have a knowledge, their judgment, and their expertise. And they usually perform these services for a fee. The minute you pay anyone a fee to do a service, you're going to hold them to a higher standard. Anytime you pay someone a fee and they don't do what you've expected, you're going to want to make up for that. So they really do need to carry E&O in the event of a claim. Next slide. I kind of just said this, but a client relies on the expertise of a professional. And due to this relationship, a client can suffer a financial loss, not necessarily bodily injury or property damage, but a financial loss. That's what they want to make sure that they don't suffer. That's where the E&O comes in. Even if the property manager was not negligent and did not cause a financial loss, if there is a claim alleged against him and there is no errors and omissions in place, he has to defend himself. And defense costs are what drive the cost of claims up. And again, if they feel that the financial loss could have been avoided, they're going to allege negligence. And as I said before, they get every party. These lawyers today bring everyone into the claim. Next slide. So under the errors and omissions, you have the diminished value that I discussed, the wrongful eviction, the failure to maintain insurance. You have your administrative and financial errors, which some of these are self-explanatory. I don't really need to get into. But for your bigger condo association managers, they're responsible for regulatory compliance of the associations. Libel slander. You wouldn't think personal injury, libel slander. You have someone out there that doesn't like another property manager, and again, they're going to say they slandered him, and it would be covered under the E&O. In most states, we can give real estate sales activity. A lot of property managers dabble in both, real estate and property management. California is a new state that we just rolled out that we can also give coverage for real estate sales. And one other area is the personally owned property. That is someone that owns the properties that they're managing. If you remember, I mentioned earlier about the habitational, that it usually happens when it is someone who owns the multi-building and they're managing them and there's no oversight. In California, if we have someone who's managing their own multi-family building, we actually do Yelp reviews and Google reviews to make sure that there's no habitational complaints on the websites to eliminate any habitational problems. But back in 2010, when the market was crashed with all those foreclosures, a lot of people bought up those properties and became their own landlords. That's fine. We're totally fine with that. Next slide. I wanted to give tenant discrimination its own slide because today discrimination rise, claims are on the rise, and they're more severe sometimes than negligence or mismanagement. They can sometimes cost the average of $100,000 to defend. Most of the time, there's not a payout for that. Like the loss is usually the expense of the claim. And they are going up for two reasons. HUD actively funds nonprofit testers in the marketplace to the tune every couple of years of like $24 million. And they go into different rental offices to see who's actually discriminating against the protected class under the fair housing. That's all HUD does. They're extremely aggressive about it. Another reason these claims are on the rise is the ever-evolving definition of a disability and what is considered a valid service dog versus an emotional support animal. Even an emotional support animal, which, by the way, doesn't always have to be a dog, they are not considered a pet according to the fair housing. So you have a war veteran coming back with post-traumatic stress disorder that needs an emotional support animal. He goes to rent somewhere. They say, oops, sorry, we have a no pets policy. Boom. Because an emotional support animal is not considered a pet, that landlord can't cite any type of pet policies. Hence, this immediately becomes a discrimination against the fair housing. In fact, I have a pretty scary stat for you. In 2017, there were 27,000 fair housing complaints. Of them, 57% or 15,000 of them were complaints as a result of a disability. So that just goes to show that the disabilities and the emotional support animals, they have just blown up. So discrimination, I don't care what kind of property manager you are, you should always try to sell them discrimination coverage in conjunction with the errors and omissions. Next slide. This is just to emphasize, this is a full-page ad in the New York Times from HUD. I'm just trying to emphasize how HUD aggressively goes after fair housing discrimination. And with that, I believe, Anae, I turn it over to you.
Thank you. Great job, Mary Jane. I think you're going to do a slide or two going on forward, but thank you for the great information. So I'm going to talk a little bit about some of the additional coverages that property management companies should have. If you are in California, it's a staple if you've got employees that, employment practices liability really is super important. It is now becoming more common in the surrounding states around California. Why? Because a lot of people are moving out of California to surrounding states, and so because I don't know how many people we've got from California because we write in 14 states, so I could have many of you from other states. So, but this is a coverage. If they've got employees, you want to really be taking a look at this. Depending on the state that you're in, especially in California, you are more likely to be sued by an employee than one of your clients. And that's an unfortunate case, but it's a reality. And the average claim, can run about 150,000. I've seen them. Up to 500,000, and depending on the size of the company, they go higher. So you're looking at exposures related to, as Mary Jane was talking about, is federal laws, state laws, and then the thing I see most in property management companies is wrongful termination and workplace harassment and discrimination. Is another one. So, which you talked about tenant discrimination. This would be employee discrimination, where they're feeling like maybe the employer is discriminating or terminated them because of a disability. And so this is a coverage that's important to consider. So you must, I recommend highly that you offer it, at least provide a quote, because that protects you with your own E&O. And it's going to be the same thing for the other coverages that I'm going to talk about, the next one being directors and officers. So it really, I'm just going to start with this. If you've got a very small company that's well controlled, you're probably not going to, they're not going to probably be able to afford or buy directors and officers. Always good to ask the questions about how the board, the dynamics of the board of directors, to find out whether there are any potential problems where they will have conflict at a later date, because the D&O officers, it's really the conflict between the two of them, the board members, that usually are where you see the most difficult on private companies, where the directors and officers, one or more than one sues the business for decisions that were made that they disagreed with. And so, and again, you can be held liable individually, so it's really important to have that protection against a claim, and to protect the personal assets of the company. You could see that the average D&O claim for a private company is about $310,000. That's enough, and that includes the settlement, judgment, and defense. So that's enough to bankrupt a smaller company. You'll see 39% of private companies with 25 or more employees, they have experienced a D&O suit in the last 5 years. So it's not that uncommon, but everyone thinks it's not going to happen to them. Again, private companies are sued by, as I mentioned, employees can sue as well, depending on the situations. Shareholders, of course, investors, right? Competitors, suppliers, customers, and lenders. So this is, you have to have the conversation with the insured about their board of directors and the dynamics within the company that could cause an exposure here, and then offer the coverage, again, to protect you from an E&O exposure. Okay, and then as Mary Jane mentioned, cyber liability is everyone's exposure these days. And when cyber liability was first introduced, it really was a coverage designed. It was really, everyone talked about it, the stealing of private information, the hacking into companies' systems and stealing people's credit card information and things like that. And it's expanded and moved in so many different directions. Ransomware became a super high exposure, and it used to be like it was very petty. They would just lock you up for small petty amounts of money. Now it's moved into hundreds of thousands of dollars that they demand if they're able to get into your system and lock you down and demand, money for your computer to be, or your network to be released. And there's no guarantee once that happens that you're going to get your network back. In addition, we're seeing all types of crime extortion, and now you've got social media, what we call deception fraud taking place, and they're creating, they've created new coverage. So the policies, it's always good to look for a broad form policy that's going to be able to expand and provide coverage for all these types of different types of hacking, phishing type techniques that are being used to steal money, intercept wire transfers, and then take over your network and demand funds for its release. So this is, again, really important. Sometimes, some carriers offer a sublimit of cyber on their package policy. I'm a big proponent for feeling that in order to get the broadest amount of coverage, you want to recommend a standalone broad form policy for cyber liability. So I jumped ahead as well. So here's your cyber extortion that I was talking about. It's coverage for extortion expenses and extortion monies paid as a result. So there is coverage for that if you do have that cyber extortion event occur. And then breach events costs, coverage for reasonable and necessary amounts incurred as a result of a privacy breach, security breach, or adverse media report. And then a system failure, coverage for reasonable and necessary amounts incurred to recover or replace electronic data that is compromised, damaged, lost or erased, corrupted, or stolen. And this would include business income and interruption expenses due to unplanned outage, interruption, failure, suspension, and degradation of service of an insured computer system. So this coverage is really valuable. And again, it's that your insured is always thinking it's not going to happen to them, but it's when it does happen. And being able to talk about claims examples is important. Now, of course, general liability is an important one to consider. This is not your E&O policy. It's meant to cover bodily injury and property damage as a result of the organization's operation. So the things to consider here are: there's a couple of situations that go on, and you have to be careful of this. Most management companies need comprehensive general liability, which really extends the GL to the properties managed. And then you're able to get that hired and non-owned auto as well. And you're going to pay more for a premium for that. We happen to have a program for community association management that actually is very competitively priced. As long as they have the E&O in place, they could qualify for it. But traditional property management, those policies get a little more expensive, and you really want to you have to be careful, because a lot of carriers will sell just a premises only policy, and that is really for slip and falls, that kind of thing, at their office location only, and this coverage will not extend to the properties that they manage. Now, in some cases, that can be a good thing, because if you're indemnified, as Mary Jane talked about, by contract, you don't really want the management company's GL to come forward for something that happens at the premise of the property that they're managing. So you want that premise policy to come forward and only pay, and then the management company is additional insured on that. So there's two ways to look at it. But you have to communicate, have a serious conversation with your client about this, and they would have to be enforcing their indemnification to be able to pay for a premise only policy, because that's a lot less expensive. And then management departments is another one where, obviously, if you have maintenance people going out to the properties, you're going to have that comprehensive GL. You won't be able to manage with a premises only policy because there would be no coverage. And if you're actually going to work at those premises, you're going to have I strongly recommend a GL policy for that. Okay, and then other coverages, of course, property is going to be an important factor, and business income along with that. So those are standard coverages. I don't have to talk too much about that. And fidelity insurance for a management company, most of them handle the funds of their client, and so you want a broad form fidelity policy. And again, this is another standalone policy that I recommend. because you want it, not employee dishonesty, you want an employee theft coverage. You want computer fraud and funds transfer. So if a hacker hacks into your online banking and steals the funds, you have coverage for that. And then again, fidelity policies can now cover the deception fraud, which involves wire transfers where there's an interception or the coordinates via a phishing hack that they actually intercept and send a different set of coordinates for wire transfers, and they have been very successful in stealing funds. The funds are sent to the hacker instead of where they were supposed to go, and so there's coverage on a broad form fidelity for that as well. And again, depending on the size of the management company and the types of properties that they're managing, umbrella coverage over the GL is super important. So we recommend extending those coverages for as much as the management company can afford, a high enough limit that the management company can afford. And then, of course, if you've got employees, you're going to need that workers' compensation policy. All of these coverages, we've got competitive programs for, great markets, and broad coverage. And so consider us for that. And then, MJ, are you covering this one or myself?
I can cover it if you'd like.
Okay.
Property management companies are a niche company, and they are a great cross-sell opportunity, especially if you have a habitational book, apartment owners, and you're carrying their GL. Every apartment building has a landlord and or property manager there. It's a great way to cross-sell the E&O over to the property manager of that apartment building. And conversely, the same thing is with a community association manager. If you have a large community association GL book, a lot of the property managers for a community association say, oh, I don't need E&O. I'm protected by the D&O of the association, which is very true. In the event a homeowner sues the association and the association manager, more than likely the D&O is going to defend that manager. However, the gap of insurance comes in if that community association manager does not have E&O and the board wants to allege a claim against him for breach of contract, mismanagement, lack of fiduciary responsibility, that D&O isn't going to pick up for that that community association manager. So if he doesn't have E&O, he's got to defend himself. Then, Ine, I'll let you address the next two.
Oh, consider the personal lines opportunity for the management company. Yes, for single-family homes, that again, MJ talked about this, but my goodness, you've got apartments, you've got single-family homes, you've got condominium associations. These are that cross-sell opportunity, as she said, a point of sale. You get into the management company and write their insurance. You're now their insurance expert. And so you want to do a review on all of their properties they manage to make sure that they're insured properly, right? So personal lines is another opportunity with single-family homes. And you could be writing a planned unit development, a community associations that's full of single-family homes. Those are all, their own parcels. So you could sell a personal lines homeowners policy and all of the personal lines coverages to all of those homes in that association. And then, I just covered the last one as well. So as you handle that as they come up for renewal and get a list of the expiration dates from the management company.
So for the policy coverages and features, Part A, the E&O, the most important, it's going to cover your mismanagement, your wrongful eviction. That's defense cost outside the limit. And that defense cost is not exhausted until the damages meet whatever the limit is. So we could pay $3 million in defense before it's $1 million in damages. Part B, tenant discrimination, that is its own sublimit of the, it's not a sublimit of the E&O. So if there's a discrimination claim, it will not erode the E&O. It is its own set of limits, and that is defense inside the limit. Part C, the EPL, again, it's its own set of limits. It won't erode any other coverages, and it is defense outside the limit of $500,000 and higher. And in today's environment, I can't imagine anyone not carrying limits of at least $500,000 for EPL. Then you get your internet coverage, your personally owned property coverage, which we discussed, the real estate sales activity, the wrongful eviction, and disciplinary action coverage is also included. All that is going to be covered under one comprehensive policy. Go ahead, Ine.
Well, that ends our presentation today. I want to thank you all for joining us. Thank you so much, Mary Jane. Your knowledge is so appreciated, and I think it's very helpful to everyone.
Thank you for having me.
Oh, wonderful. And so for those of you that want to submit, send in your E&O applications. We can quote off of existing applications. Is there anything that you wanted to say, Christina?
No, I appreciate everybody joining. There is so much opportunity with this class of business. Take a look at what you have at your desk now and who your contacts are, and contact me. If you have any other questions, you need to know what's the appropriate application. If you don't have one, I'm more than willing to help you through everything.
Thank you, Christina. All right, thanks for joining us. Have a great day. Take care.
Thank you. Bye.